Hey everybody, welcome to Trading Futures with me, Anthony Crudele. We have a great show for you today. I will be joined by futures and options trader Gavin Fernandes, personal trainer and yoga instructor Blair Rockoff, trader and performance coach Dan Hodgman, and last but not least, futures trader Dani Sittloh. Welcome to Trading Futures. Gavin, what's up, my friend?
Yeah,
Thank you so much for joining me.
thanks for having me.
So Gavin, you're doing successfully what so many people struggle to do, make money trading futures while working a full-time job. How are you doing it?
Thanks, Anthony. Well, it's a journey about figuring out the best risk profile, trading methodology, and consistently working on your trading psychology that matches the first two elements I mentioned. And it's a tough journey. You know, at the end of the day, I started off as a day trader. I started off before that scalping, and now I'm a trader that mainly works on intraday positions. And sometimes my positions could last 2 days, sometimes 5 days, in rare cases longer than that. And I figured out that over time, you know, with my temperament, I was more suited to something where I don't really need to look at the markets consistently for a period of time. I start the day looking at where markets are. I end the day looking at where markets are. I have a whole bunch of subscriptions I follow that kind of give me direction in terms of what I'm thinking with respect to what some others who follow the same trading methodologies think. And that kind of helps me on this journey. But it's a three-pronged approach, and you know, success is an ongoing journey. I'm thankful, but it's been an interesting journey so far.
Oh yeah, definitely. But you're doing well. You're coming along. And what I'm curious about is, what's a day in the life of Gavin like? How are you allocating time between working your full-time job and trading futures?
Great question. So I'll break that down into separate elements. The first one is what's going on, the news basically, in the world. And that's something I do consistently throughout the day. I get time to go to the bathroom, I'm checking what's happening in the markets, what's the news. I may not necessarily see what my positions, how they are faring at that point of time, but I like to be aware. So I'm well read basically on what's happening. The second is trading methodology. And it's very important for me, I believe, to have perspective around my wave count when I talk about Elliott Wave Theory, which is the methodology that I use, and what certain other perspectives of those wave counts would be. And I spend time every evening, an hour right after work when I get home, watching videos and that stuff, looking at wave counts, thinking about what else is possible, how am I wrong? And thirdly, most importantly, about working on myself. I have to meditate almost every day. I have to go maybe do a run, you know, kind of maintaining the balance. And that kind of completes the picture.
I'm impressed by you because you were able to figure out, which took me a long time, was that you have to find a strategy that fits your personality. True. You mentioned Elliott Wave. How does Elliott Wave fit into your personality?
So I realized my first two accounts started off well, and then I got into this phase of overtrading and self-sabotage, and they would always end, those first two accounts, with an epic collapse. And I figured out that I need to build a strategy. I can't just talk to myself and say, hey, don't overtrade. I have to build a trading strategy that stops me from overtrading, stops me from having to look at the markets every 2 minutes, wonder whether I'm stopped out or not.
Yep.
And that's why I felt Elliott Wave fit in perfectly. The first thing about Elliott Wave is it's built on market psychology, you know, and it's patterns that repeat over time. And if we're able to, after a considerable amount of time, accurately assert what a wave count is for a particular market, you can get very profitable positions. It's all about being patient, waiting for the right setup. And when it does come, you're looking at a setup where, number one, I very rarely trade outright positions. It's mainly options that I use, whether that's a put spread or a call spread, balanced butterfly, etc. So that gives me a time horizon over a few days that I'm not really concerned about, oh, am I stopped out or not? You know, what's happening to the markets. There could be volatility that really doesn't affect me. So overall, I would say it's basically all these elements of, you know, finding the right methodology, and more importantly, again, the trading psychology. I constantly work on that, constantly work on figuring out why I have certain biases if I do, what those biases are, and how do I make sure that that doesn't roll over into the way I trade in the markets.
Well, I got to tell you what, I'm excited to see how you go about setting up a trade and executing your trade. You ready to go to the charts?
Absolutely.
All right, everybody. Next up, Gavin will share with us the rules for his strategy and how his trade's set up using Elliott Wave. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. Gavin's still with us. Gavin's going to show us the rules for his Elliott Wave strategy and how a trade sets up. Gavin, thanks for sticking with me.
Thanks,
Walk
Anthony.
us through your rules.
Well, for a trade setup, the two key elements is probability and profitability. And I can show you how we maximize this using Elliott Wave Theory. Now, in its simplest form, an Elliott wave is 5 motive waves in the direction of the trend, bullish or bearish, followed by 3 corrective waves in the counter-trend direction. And there are certain rules, easy rules to follow. Number 1, wave 2 can never retrace more than 100% of wave 1, else the wave count is invalidated. Wave 4 can never cross into the price territory of wave 1, else the wave count is invalidated. Wave 3 can never be the shortest of wave 135. And finally, corrections are always fully retraced by the resuming trend. And when I pull up this is a simple representation of what I just mentioned. You have 1, 2, 3, 4, 5 waves in the direction of the trend, in this case bullish, followed by 3 waves, which is a corrective pattern. And each of the waves in the direction of the trend itself could comprise of 5 subwaves. So it is possible for us to use wave count to kind of estimate where we are in this whole wave cycle, and then to make bets with a great degree of probability and profitability. What we've noticed is that wave 3 is the most probable and profitable among all the other waves. Doesn't mean other waves cannot be used, but this is the most probable and profitable. Because this wave is the most impulsive, it moves the furthest. It's also the easiest to catch in terms of a setup. And I have a perfect example when we talk more about execution to talk about that.
Yeah, we'll get into the execution in a moment here. I want to stay on this a little bit longer because this is actually something I'm not too familiar with, Elliott Wave. And when I look at this, you have 1, 2, 3, 4, 5, like you mentioned, A, B, and C. Is this basically a completed full Elliott Wave pattern? First question.
Yes, this is a basic, completed full Elliott Wave pattern.
Okay, and you said number 3, the wave 3 is where the most profitable and highest probability. So my question to you about that is it when they're catching it there? So what you're saying is that's the most one. So right after 2, it's getting in and catching that wave.
Absolutely. However, this wave would subdivide into 5 other waves. So think of this wave as this 5.
Okay.
And what you want to do, the most profitable, is catching the 3 of the third wave. As you see, this is the first wave. You could imagine this being the third wave too. So you want to catch 3 of 3, which is the most profitable. However, you could, if you get a good ABC down, which is a corrective wave, you could get in here as well using option strategies that maximize your output.
Another question when I look at this is, can this happen if you were to flip it on the short side?
Absolutely. Definitely.
Yeah. I like to trade shorts. Yeah. Not the S&P that much these days, but so overall, this can be just flipped and it works in both directions.
In both directions.
One last question before we get into execution. How are you identifying when you get to 2 to catch wave 3? Because to me, I look at it and go, well, it looks easy here, but as you're at 2, I'm wondering, how are you going, this is 2 going to be wave 3? How do you do that?
That is a brilliant question. And keep in mind, there are multiple wave counts for any market at any point in time. And as a trader, you're always second guessing yourself. What if I'm wrong about this? What if this is the wave count and this is not exactly a 2? This may be, a subdivision of 1 for all you know. However, what we are looking for, again, is a specific setup. So once 2 is done, in most circumstances, I won't call a trend reversal here itself. I will wait for there to be movement in the uptrend, and I'll look at the first wave of 3, which could be a wave like this, followed by another retracement, and then set myself up for wave 3 of 3, which is the strongest in most cases.
Great explanation, Gavin. You ready to show us how you execute one of your trades?
Absolutely.
All right, everybody. Next up, Gavin is going to show us how he executes his Elliott Wave strategy. So stay tuned.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
Welcome back, everybody. Still with Gavin. Gavin, great explanation on how you use Elliott Wave Theory. Now, show us how you execute using Elliott Wave Theory.
So what I have here is a perfect corrective setup. This happened right after the trade negotiations, discussions that didn't work out with China so far. If you have a clear ABC, which is corrective in nature, and why I say this is textbook is because this wave has retraced very closely to wave 4 of a previous wave count from the 8th of March, which is 2722, that level in the S&P 500. We have a retracement come back, and once I got this move back down, I was quite confident, again, from a probabilistic standpoint, that this could retrace all the way back to the previous low, which is 2722. So at this point, I get in what's called a balanced butterfly. So I'm buying a put spread. I'm buying at 2800, selling at 2722, and I'm selling a put spread, 2720. Actually, I went a little low, a little out of the money to be safer, which was 2700 to 2650, because I didn't expect the market to keep falling within that range. So that minimizes my theta, or time sensitivity, for this options trade, and at the same time, it gave me a very good risk to reward probability. I'm talking about 1:4, in fact, more than that, from a risk to reward perspective. Worked out beautifully. I was out of the trade. And now, since I know we have a corrective setup that is over, I'm expecting an uptrend. And if we look at the markets even today, they look bullish in nature, very bullish in fact. So I waited for this sort of reversal. We had a 1. I counted a 3. You can't see it out here, but this was a corrective wave to wave 2. And then I set myself up well for the third wave, which was very quick, happened like a week and a half ago. As soon as we went up beyond, broke through wave 1 stop, I went long. And I went long this time. Fortunately, at this point of time, we had micro minis, so I didn't have to do the whole spread thing. I had a single spread, which was a call spread. I went long here at 2830, and I was all the way up to 2900. That's how I expected. That's where I expected wave 3 to end, because wave 3 at a minimum is as long as wave 1 most of the times.
Couple of questions. One, it seems to me like there's a lot of waiting in between trades.
Yes.
So is there any sort of automation or something that you put into play to let you know that this is setting up?
Well, no automation. I look at the charts, but that's a great point. For me as a part-time trader at this point of time, this works perfectly. I don't have the time to be in front of the charts the whole day, but this works perfectly. There is waiting involved, but the risk to reward for this move was beautiful. I'm talking about a 1:6 for this move itself. Worked out very well.
A couple of other things. One, you've used outrights and you've talked about using options. Just distinguish the two different times and types of trades as to why that is.
Absolutely. So my spread was a 1-week spread, as in 5 trading days. I expected this to happen much faster because wave 3s are faster. However, gave me more relaxation from a time perspective. And at 2850, that's when I got into a micro mini to scale into the position. 2875, I got into the next micro mini. And those 2 moves, the first one lasted 2 days. The second one was just a single day trade. I made some money on that trade and I got out for a very small margin. However, most of my spreads last a week or so, sometimes 3 to 5 trading days.
So you answered one of my questions. You're not getting in all at once. You're letting things set up,
Absolutely.
and you're managing the positions throughout. One question I haven't asked yet is, when you get into one of these positions, I look at this and go, how do you know you're wrong?
That's a great question, and I have been wrong. If you look at what happened in December, you had a pretty much similar pattern. You had a big crash down, and then you had a retracement up, and that turned out to be a V-shaped recovery for the market, which is not very common. I expected there to be another move down, what's so-called the fifth wave down, to make this a bear market. That didn't happen. However, you don't just jump in, you look for the perfect setup. So in this case, let's assume we expected this to be bearish. You have a 1, 2, 3 up, and then you say, okay, if this is bearish and the downtrend is going to resume, you're going to see some strong strength come down here. If that happens, like this could have been, a move like that. If you go short here, you're immediately invalidated by wave count. And when I say that, I mean in a day or two, you get to know, hey, I'm wrong. As a golden rule, if my spread loses half its money, I'm almost out of that, 9 out of 10 times. And if the wave count is invalidated, for example, this moves down, I go short here, and then I see this thing happen, I know I'm not going to mess around with that. So when the wave count is invalidated, I'm out of that trade as well.
Well, thank you so much. Fantastic insight on how you execute a trade. Next up, everybody, we will hear from Dan Hodgman with TopStep's Moment of the Week. Stay tuned.
Thank you.
Why trade futures with TradeStation? You can trade over 80 products from home, work, or on the go with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at TradeStation.com.
Welcome back, everybody. I'm now joined by Dan Hodgman. Dan, what's the Top Step Moment of the Week?
Anthony, I'm excited this week. One of my favorite things in trading is talking about settlement price. First level I ever learned about, it was the last thing I ever looked at when I was on the floor at the end of every single day running P&Ls. And so today I'm really excited to go back to my main market, the 30-year bond, and show a couple opportunities right off of settlement price. So the first one I have here is back on May 17th. The market opened up well away from settlement price. It made an attempt to push a little bit higher, and we found some resistance up above. So that once we find that resistance, we can see that the market made 3 attempts to push, failed. That's our opportunity to look for a trade. And when we're getting into a trade, one of the biggest things we have to think about is where am I getting out, whether it's a stop or a profit target. And right now, we are looking at a profit target right down to settlement price. That market moved beautifully down to settles, and that's why I'm always looking at this.
I see where you're looking to cover, but like everybody knows, I'm going to ask, where are you getting out if you're wrong? Where are you wrong?
It's a great question. Well, first off, we do see that there's quite a bit of room back down to settles. That allows us some room on our risk, but I'm also always going to be looking at some of my favorite levels, prior day high. That prior day high was just slightly above where our overnight high was, and that, for me, I'm going to be looking on just the other side there for an opportunity to get out and maybe make some adjustments.
Is there a specific risk versus reward that you're looking for this type of a trade setup?
Well, absolutely. I won't even look at a trade unless it's a minimum of 2 to 1. So if my reward is going to be double my risk, that leaves an opportunity. Usually in the bonds, I'm trying to keep it even tighter than that because it's a slow roller. You don't want to get caught getting too much risk on a trade here. So the next one we got is a little bit different. Same thing, we're going to talk about the bond as well. This was back on May 30th. The market actually opened up pretty darn close to settlement price. And so, well, what happens here? We're getting close to settlement. It isn't going to push there. Well, it depends on how everything opens. And we saw the open push this market right down to almost that overnight low. So I'm going to jump in front of you and answer that question. That is where we're going to start to look for our point of risk. And so here we go. We've got an opportunity to enter this market. And where are we looking for our target? Settlement price. So settlement price here, we're looking at almost 16 ticks if we can get in here down towards the bottom. And the best part, the beauty about trading is once we get to that target, we can make some calls or make an adjustment, and we can determine how that market's moving. This market moved a full handle off that low. That's $1,000 a contract. And that's what we're here for. We want to make money. So whether you get out halfway there up to our high or you get out at settlement price, it leaves for some awesome opportunity.
What I like so far is that you're keeping a very simple process around a very simple indication or whatever you want to call it, price settlement. You know, I think that people complicate these things way too much.
Right. It's not a point of, well, it's going to be resistance or it's going to be support. It's an inflection. How does that market react? We can see here that market slowed down just slightly, but once it kind of broke through, it accelerated to the upside, and we could have sat in that for a little bit longer and made a nice trade.
Love what you said, reaction. It's always about the reaction.
Right.
You're watching it. Yep.
So here's another attempt on June 5th. This one is a beautiful chart setup, and we have some really cool opportunities in this one. So first and foremost, let's just frame it out like you like to do. We're looking at our risk. First off, we've got swing lows or prior day lows here. We have overnight highs, two of my favorite things to help frame my market. The market opens up above settlement price and works our way down. But this one's great because it gave a couple opportunities to enter at our extremes. When we're ranging sideways and that market's just walking sideways, we find those extremes, and those extremes are where we want to enter the market. And settlement price, again, it accelerates through, so it lets us make that judgment call. If it can accelerate through, perfect, we can sit in this and we'll find another entry up top.
Are you using any other confirmations around this, or is this just how the trade sets up?
Obviously, you want to watch that volume. How's the volume? How's that dome filling up with orders as the market approaches, settles? If I start to see settlement price fill up strong, I'm probably going to think, you know what, I got enough money on the table here. I'm going to go ahead and close this out because you know what, I kept my risk really tight. And that's what we got to do. If we can keep that risk really tight, we don't have to squeeze the market for everything it can give us. So, and the last one, this was actually the unemployment report from June. We had that wild volatility. We had some numbers missed, and sets up the settlement price here sets up really nice as support. You can watch the market test it over and over and over in that overnight. And the market opened up. We had our number come out, and bonds took off. So it sets up for a great opportunity for a long here and nice asymmetric trade. When we're talking asymmetric, low risk, big reward, and right here you're getting 6 to 1, 7 to 1 on a nice trade.
Simple, define loss, watch the reaction.
Absolutely. And you know, one thing too, a lot of people get questioned, where do I get out on a trade like this in the profit? Swing highs maybe, prior day highs, or again, watching that volume, how it comes through. So just a couple lessons in execution here for this week's Top Step moment. The floor doesn't exist. That number came from the floor. We heard about it all the time. It was the last thing and first thing we looked at every single day. Know your prior day settlement for any market you're trading. And lastly, this is one of the most looked at inflection points by all traders. So it can definitely be that magnet or springboard like we showed.
Definitely, everybody. So many strategies that I know from different traders will look at how the market closes, and that's a lot of times where they're entering or exiting positions, so it's always very important. Great stuff as usual,
Thank you.
Dan. Thank you. Next up, everybody, Dani Sittloh will tell us what's on her radar using Wazzabull. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. I'm now joined by Dani Sittloh. Dani, what's on your radar?
Awesome. So today I chose a bearish alert with the Canadian dollar. Right? Currencies. Let's go. Let's jump head first into currencies. All right. So in this alert, the Canadian dollar crosses below the 20-day moving average. It's a 4-hour outlook, so short-term-ish, right?
Yep.
And it's bearish, so 53% chance it may hit the 74.61 target. But there's a 47% chance it may hit the 74.82 target, the upside target.
Yeah, I really like this one for day traders out there because it's only 4 hours. You're looking at a major moving average that there's a lot of eyes on. Everyone talks about. A lot of us don't trade moving average, but we like to use them as confirmation. This is great confirmation as to what happens, proven by statistics that 53% chance it's going to get to 74.61 down below, and if it doesn't work, it could potentially go up to 74.82. So Just depending on which side you're trading it on, you've got some targets and you've got some probabilities.
Absolutely. Exactly. Because sure enough, in less than 45 minutes, it actually hit the upside target, even though it's a bearish alert. And the percentages were similar, but we had the targets. That's what I love. We have the target prices so that we do know that either side.
Yeah, and what I like about it is it's a defined line that you're getting above or below, so it's not like you need to watch too much. If it's above the 20-day and you have confirmation as a trader that it might go up, well, there's a target that it might hit, and if it's below it, there's a target that it might hit. Good stuff,
Absolutely.
Dani. What else is on your radar?
All right, my first love, the E-mini S&P. For this one, I chose also a 20-day moving average because I wanted to point out that multiple markets use the same indicators. They will apply. So if viewers, traders are interested in other markets and they've fallen in love with specific indicators, why not see if they work in other markets? And likely they will, right?
Yeah.
Yeah, so this time though, it's a bullish alert and the S&P crosses over the 20-day moving average. All right, so this is a pretty hefty probability, I think. So 63%, it's probable that it will be a bullish move, right? And 37% it will be a bearish move. At the same time, and I keep pointing it out, there's target prices on both sides in case the market doesn't follow through with the alert.
Yeah. What is the time frame that this 28.74 and a quarter would get hit?
So they're looking at a 4-day outlook.
So 4 days.
Yes, and what's interesting is these alerts come in and the time is listed at the bottom of the screen, right? At the bottom of the alert. And so on the update report, it will say it hit it 2 days later. Interesting. So while it's a 4-day outlook, according to past market behavior and in statistics and testing, back testing, it hit it 2 days later. I don't know what it means, but I'll likely continue to think about it, right?
What do you know? A bullish alert in the E-mini S&P actually worked out, everybody. Don't see too many of those, right?
Right.
No, but another thing that I like about this one, different from the other one, is this is really good for the swing trader.
Yeah.
This is good for the trader who's looking at a multi-day outlook. So,
Yeah.
Dani, once again, great stuff with what's on your radar. Next up and beyond the charts, Blair Rockoff will join us to discuss how we could become rock solid. Stay tuned. Hey everybody, thank you for tuning into the show. To learn more about the charts I use, Wazzabull alerts, the basics of trading futures, and how you can even get funded to trade futures, please visit anthonycrudele.com. Now let me take you right back to trading futures. Welcome back everybody. Gavin is still with us and we are now joined by the founder and coach at Rock Solid Health, Blair Rockoff. Blair, thank you so much for joining me today. Talk to us about what it means to be rock solid.
Yeah, thanks for having me. To me, rock solid is a way of living. So it shows up in the gym and how you focus on yourself, getting yourself stronger both mentally and physically, and then using that, what you do just a couple hours a week, and transfer that to how you live your life. So taking that strength to how you are with people, taking care of yourself, how you eat, how you sleep. It really just is a way of being.
So it's overall, it's everything.
Overall, it's everything. It's
Yeah.
how you are.
Yeah, no, absolutely. When you're teaching people this, is it personalized or is it a method that you teach generally to everybody?
There's definitely foundations that I think everyone can use. So sleep 7 to 9 hours a day. Drink half your body weight in ounces of water. Eat like an adult. Take care of yourself and your food. But then there are personalized ways that we work with people depending on, what's your schedule? What does your day-to-day look like? And when we're able to take exactly what goes on in your life and set you up for success, that's how we can get people the best results.
So talk to Gavin and all the other traders out there. What are the initial steps that we can do to achieve rock solid health?
Sure. Well, of course you can come to me at Rock Solid, but no, really, if you, wherever you are, hiring a trainer or professional in the field, we're here to help guide people on the progress, so you don't have to to wonder and think and, make all these mistakes. We're really here for you to say, okay, here's what you have going on. Here's what your goal is. Let me help you get there. Two, like I said before, like eating and fueling yourself well is so important to how we feel, how your energy is throughout the day. If you have to be sharp and on point, making big decisions, and you get tired at 10 and 1 and 3 because you're just on coffee and sugar and donuts and muffins all day, it's going to make it harder to make those good decisions. So just putting into place your food schedule, your eating, all the things that work best for you. And the third thing is to show up no matter what. Just don't quit. Our minds take us out of the game before our bodies do, really. We just say, oh, we can't do it. I want to quit. Like, this is too hard. So just keep going. Oftentimes people say, oh, I didn't feel like going, and then you go to the gym on that day, and that's when you end up having like the best workout ever. So I like to tell people, just if you walk through the door, I'll help get you through it no matter what.
Give us an overall view, because you talked about how becoming rock solid healthy is mind, body, and everything,
Yeah.
right? How much of what your program is and what other traders should be doing committed to working on mental, physical, like how do you allocate that?
The physical, so I would recommend, if you can get to the gym or your trainer or wherever you can go, 3 strength training workouts a week. And it doesn't have to be 60 minutes. Like, if you're effective and you need to get it done, 30 minutes. And on other days, just moving, whether it's walking your dog, walking with your kids, running errands, but moving, just move and be active. And then I really think the mental aspect of it is even more important than the physical in a way, because if we don't actually work on what's underlying, we're just kind of pushing that physical part without really getting to the bottom of making ourselves stronger mentally, how we feel about ourselves. And so whether it's books, reading books, going to talk to people, just having that healthy support, I think that without that piece, you miss that fulfillment and bringing it full circle.
Yeah, I agree with you. And something that I do is that I schedule my week out so each day represents something.
Yeah,
right?
yeah.
And I definitely agree with you that the mindset side of things, and in particular for me, diet,
Oh, yeah.
supersedes everything else. The exercise comes.
Yeah.
No doubt. You guys just get out there and start doing something. That's what Blair's saying. Check her out. Rock Solid Health. Where could people go to learn more about you and your company?
Yeah, definitely. So website, rocksolidhealthchicago.com. And then mostly we're on Instagram, Rock Solid Chicago. That's where we post videos about what we're up to, who our clients are, what we're doing, and then contact us through the website.
Yeah, everybody, definitely check it out. And if you're looking for a new workout, go to her Instagram page and check it out. All right, everybody, thank you so much for joining us today. You can catch all episodes on AnthonyCrudele.com, and you can follow me on Twitter and Instagram. See you next time.